Hello everyone, George DeSantis here with the look at the market for the week ending December 9th, 2016. Before we get going, let's take a look at the disclaimer. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. This is not investment advice. Let's begin by taking a look at the monthly chart of the S&P as we usually do. As I mentioned 2 weeks ago, I was out of town this past weekend, so I didn't do the look of the market. In that time, the market has performed pretty well as far as bullish scenario is concerned. We can see on the monthly chart here that we closed at the high or pretty close to the high for the month. So that's very bullish. We have the Kalman filter above the instantaneous trend line, and that is our long-term trend indicator. Trend started here back in the early part of the year. What date was this? Let's see, this was May 31st. And since then, we've been in an uptrend with some variations, of course, some whipsaws, etc. The parabolic is below the most recent bar, so there is no indication to reverse this strong uptrend. MACD crossed above, the fast average crossed above the slow average. So now we have a positive number for MACD, 5.83. So MACD is in bullish territory. Elder Force Index broke this trend line here and is now trending up. So the multi-chart is still looking very, very bullish. Let's take a look at the weekly chart. On the weekly chart of the S&P 500, we can see this nice move here for the last 5 weeks or so, since we had this bottom. So we're now finding the instantaneous trend line being crossed by the Kalman filter, and of course all these bars are above the instantaneous trend line, which is the blue line. Parabolic is below the most recent bars for 3 bars now, so there is no indication from the parabolic that we should think of reversing this to a downtrend, or that this trend would be reversed to a downtrend. So that's looking pretty bullish. Right now, the percent R is above 80%. And that is indicating that the momentum of this uptrend is pretty strong. We can also note that we had, when we had divergences here of percent R, it led to an uptrend. We don't have any divergences right now. But let's take a look at RSI 12. RSI 12, since it crossed above 40% here, came and tested it once, is now above 60%. So this is really looking like a very bullish market, and it is. MACD is now in bullish territory. The fast average crossed above the slow average, and we are now at 5.4 in positive territory or bullish territory. So nothing not to like about this chart either if you're bullish and if you own stocks or tradable instruments like ETFs. Let's take a look at the daily chart. Here's a daily chart of the S&P we usually look at. First of all, it's the 930 chart, so the 9 EMA and the 30 weighted moving average, as well as the 90 exponential moving average. Something to note here, you see, since the 9 crossed above the 30, which is a buy signal back here in November, okay, this was the first close back here in December. This was the first close below the 9, which, as any of you who've seen Rick Monteith's work on eFuture Vision, will know that this is one of the best buy signals. The first close below the 9 EMA after the cross of the 9 above the 30 is a very powerful buy signal, and of course it ended up being so. In the middle of the chart here we have RSI 12. Boy, that thing is screaming up. It's now close to 80. Williams pro buying indicator is indicating that it's now above 5, and that's pretty bullish. And percent R is close to 100. So all of these charts are looking very bullish. The monthly, the weekly, and the daily. Let's take a look at another one. I'd like to see some other charts on the NASDAQ, etc. So let's take a look. Before we get to the NASDAQ, here's another chart on the S&P, the daily chart. And on this, I have the Bollinger Bands. You could see that the S&P came out of a squeeze here. You know, when these bands narrow like this, we call it a squeeze. And the squeeze will resolve to the upside. And we can see all the other indicators like the parabolic and so on. Of course, same thing as we saw earlier. Now, another indicator we didn't see before is Jerry Appel's sum of the rate of change indicator. And of course, we had a buy signal here. We got whipsawed a little bit here. And we also got whipsawed here. But after this buy signal, we are now screaming up, okay, running up. MACD, of course, is trending up. And we saw the percent R is very high. So let's go to the NASDAQ. So here's a weekly chart of the NASDAQ composite. And 2 weeks ago, I mentioned that I calculated a target based on this ascending triangle, this ABCD triangle. It's called an ascending triangle. You have this horizontal line here and an ascending line here. And based on that, we calculated a target of 56.54. You can see the calculation here, A minus B, and the result is added to C. So we come up with 56.54. We are now at 54.44. So we've broken above this resistance line here, and this is looking as though we might actually achieve that target. I think we saw NASDAQ weekly. We saw that RSI, we can see that RSI 12, since it crossed above the 40% line, has held that and hasn't breached the 40% line again. So this thing is also looking very bullish. And as I mentioned many times, if the NASDAQ leads the rest of the market, as Jerry Appel and many others have said, then this looks good for the bullish scenario. We are headed higher. Let's take a look at a daily chart of the NASDAQ. Okay, this daily chart of the NASDAQ simply shows the instantaneous trend line in blue, the Kalman filter in yellow. And we can see that since the Kalman filter crossed above the instantaneous trend line here, it came back and tested it. In fact, notice how these price bars just hit the instantaneous trend line and it was off to the races again. So this is a daily chart now of NASDAQ Composite. And we can see a number of gaps. One, two here, 2 gaps, 3 gaps. Okay, gaps up. So NASDAQ daily is looking very strong too. Let's take a look at the chart, the weekly chart of the S&P, of SSO, the leveraged ETF of S&P, which I own, or I usually trade that. And since we had this zero line reject here, the CCI, on the CCI, Commodity Channel Index, we've crossed above the 100% line. We had another zero line reject here. When we come down like this and we go back up, we're rejecting the zero line. So that's pretty bullish. Just wanted to show you that. I still own SSO. I actually bought some more, I think 2 weeks ago. Let's take a look at something else. Let's turn to the charts of stockcharts.com, where we can find certain other indicators like the new high, new low index. You've heard Alex Elder say that he believes that this is one of the best, if not the best leading indicator, one of the best leading indicators. And so what do we have here? We have the new high, new low spread, the index, 5-day average of the new high, new low spread, screaming higher, okay? It came out of this downtrend here beginning in July, and now it broke above it. So that's really, on the daily chart, that's really telling us this market is screaming. On the weekly chart, if you look at a weekly chart of the new high, new low index, you could see that it just broke above this resistance level. And we had pretty high levels here. Some people say, well, the market is overbought, but it can remain overbought for a while. And perhaps as we enter the new year, we need to be more cautious because there may be some profit taking, a lot of profit taking then. But as of now, this market reminds me very much of the 90s, the late 90s. And I was around at that time. I made most of my money at that time. And I remember people saying, oh, it can't go any higher, it can't go any higher. It'll go as high as it can go. And then, of course, we had that big dot-com crash. But I don't think we're anywhere near there because P's are not that outrageous yet. In the 90s, we had P's over 100. Right now, we don't have anything like that. So I'm going to say quit. I'm going to quit for this week here and have a nice weekend. Enjoy football or whatever is your taste. And we'll talk to you about this again next weekend. Have a nice weekend. Bye-bye.